Bitcoin. So here's its history, most of its history. And you can see we have been in effectively a bull market with higher lows since its inception. And here we are again. We're on the way.
Wednesday, the U.S. bank said it would build government SEC deals in Q4 2023, which made the markets happy. Not as much as investors thought it would. This caused a 20 basis point drop in U.S. 10-year yields, its biggest daily drop since the new security craze began in late spring. The move was caused by dovish FMC hints and a disappointing ISM manufacturing report. This is a welcome improvement, especially given the amount of longer-term attractive issuance. Vis-a-vis bills have gone down over the last 34 years. Last week, the yield on the benchmark 10 years U.S. depository note reached 5%, which had not happened in 16 years. This caused a lot of talk about whether it had reached its peak or was just taking another step in its long and troublesome move. Loan costs are also at all-time highs. This could discourage people from investing and make it harder for families to use their savings, especially since overabundance reserves are running low. Eventually, any administration will try to quickly restore its sovereign validity by cutting spending to cover the risk premium at a time when public assistance programs should be expanding. Cathie Wood now gives a clearer view of money strategy and how it impacts the economy. She also talks about her thoughts on money strategy and other financial issues as you watch. Don't forget to press the Stir Things Up Around Town button. Join in and leave your thoughts below.
I think what happened this year is quite significant. It happened that the Bitcoin moved up during a risk-off, a very important risk-off moment, the regional bank crisis in March. It went from 19,000. This is a long-term chart, so what I'm telling you is an intraday. It hit a low during that regional bank crisis at 19,000 and shot up to 30,000. Why was that? Flight to quality, as Larry Fink would say. Flight to quality, as we would say. Flight to safety, as we would say. Because there is no counterparty risk here in this decentralized, transparent monetary system, unlike what happened to the fiat monetary system in 08-09. And I think more people are beginning to understand that this is not just a risk-on asset. When the markets are feeling really good, Bitcoin tends to do very well. But can you believe it's also a risk-off vehicle? And more investors, including institutions, are beginning to understand this.
While Financial Approach is in charge of the fight against growth, financial arrangements can help bring back cost stability and lessen the impact of the rising cost of many everyday things on those who are already struggling, all while new measures or changes are being thought about in the context of a large-scale expansion plan. The people who make things should think about the fact that different groups of families may already be feeling big distributive effects. Shrewd, a financial approach that includes extreme decisions about what planned things to cut and which to protect or grow can support a financial strategy in the effort to slow growth while protecting those who are usually affected by the cost of living emergency. Let's now watch the video again to hear Cathie Wood's thoughts on financial approaches.
This is indexed to 100, which I think was a 1980 number. And look where we are. We're back where we were in the early 80s. The commodity prices have gone nowhere. And if you want to look at recent times, sure, you can see the supply chain shock that we went through that took this metric up from roughly 60, well, roughly doubling it, 60 to more than 120. But it's coming down now. It's down more than 25% from its recent peak. And if you look at it again, perspective is everything, since the 08-09 crisis, you'll see that it is in a downtrend. Deflation. Most people don't understand this. The Fed certainly doesn't seem to understand it. So we do not think the greater risk here is inflation. Commodity prices are the first place you'll see inflation brewing. And commodity prices are determined at the margin. So incremental demand relative to supply, which shot commodity prices up during the COVID crisis. And we had not only COVID, but the war in Ukraine exacerbating that supply shock. Now you have them coming down, and we don't know what's going to stop them from coming down further now, perhaps to the lower end of this range. Hopefully not lower, because that will be we'll be in more of a free fall situation, which of course we do not want. So that was interesting. The other interesting thing is the dollar. Again, a little bit of perspective. I started in the industry in the late 70s, and you can see in the late 70s, the dollar was at a low level. And in fact, the US was the laughingstock of the world. Our productivity was collapsing. The dollar was collapsing. We had very weak leadership in Washington. And then the combination of good fiscal policy and monetary policy in the early 80s took the dollar up dramatically to the point where it was causing great pain in the rest of the world. As the dollar was appreciating, their currencies were depreciating. Their purchasing power was going down, and they were servicing dollar-denominated debt with their own currencies, which did not buy as much of the dollar. So it became too onerous. And that was just way too high, too deflationary in the mid-80s. And you can see what happened after that. In the late 90s, the US was quite the opposite of the late 70s. We were the superstar with super productivity growth and technology with the internet, the name of the game. So we had a terms of trade appreciation in the dollar, which was very good for the United States. And then we had the opposite of that, the tech and telecom bust and everything that came with it. And finally, the 08-09 crisis. And the dollar just was under tremendous pressure. But look what has happened since then. The dollar is up 40%. That is a powerful anti-inflationary force. And it has been in place now for 13 years. So there's a cumulative effect. And that is why we believe commodity prices have come down during that period of time in a trend sense. And have come down recently. So on to
2 big wind projects in the ocean off the coast of New Jersey have been canceled. This is the latest in a string of. A series of setbacks for the U.S. offshore wind business are putting at risk the Biden administration's goals to keep 10 million homes from using offshore wind turbines by 2030 and to build the Sans carbon electric matrix. 5 years after Danish Breeze energy engineer Ørsted said this week, the company is turning down its Sea Wind 1 and 2 ventures off the coast of southern New Jersey because of problems with the supply chain, higher loan costs, and not being able to get all the tax breaks the company needed. The project should have over 2.2 gall of influence. This comes after designers in New Britain canceled 3 projects that would have added 3.2 GW of wind power to Massachusetts and Connecticut. They said their plans were not financially viable at this time. This is in contrast to President Joe Biden's goal of 30 GW of seaward wind power by 2030. Even though it is hard, seaward wind keeps pushing forward. According to the White House, recent rumors in New York State and support from the inside branch of the country's largest and most planned offshore wind farm in Virginia's Department of Energy, the board also announced new offshore wind rent areas in the Bay of Mexico, even though macroeconomic problems are making some projects harder. The U.S. seaward wind industry is growing, creating well-paying jobs in areas like transportation, construction, and development. It is also strengthening the impact network and giving American families and businesses new clean energy resources. The White House said in a statement Thursday that industry experts currently say that the U.S. probably won't reach 30 gigawatts of seaward wind influence, but it is still possible to reach 20 to 22 gigawatts or more by then. This is definitely more than the country has now, with only 2 small projects giving a small part of a gigawatt of influence. Huge sea breeze farms are the key to the government's plan to switch to clean energy, especially in crowded East Coast states that don't have much room for wind turbines or solar panels. According to Clearview Energy Accomplishes, a Washington, D.C.-based research company, 8 East Coast states have seaward wind commands set by law or leader activities that require them to add a combined limit of more than 45 G feelings above the full-scale point of view by Cathie Wood. Do you believe the problem has been solved? Let us know what you think in the section below. Don't forget to press the subscribe button, buy in, and turn on notifications. Thanks for watching.